What is going on, everybody? Welcome in to another edition of the Energy Newsbeat Daily Stand-Up here on this frigid Friday, December 23rd, 2022. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. My man, are you frozen?
Yes, me and the grid are frozen.
But it still is a beautiful day in the neighborhood, and we have a great show for you guys lined up. Stu's going to first talk about, is oil going to return to 2023? We have a portfolio manager from 9 Point Energy Partners, Eric Nuttall. He wrote a nice article outlining why he sees oil returning in 2023. I will probably disagree with that, but we will cover that when it comes. Tesla is now worth less than ExxonMobil as the stock plunges towards its worst month, quarter, and year in history. We will cover what that means specifically for the energy markets, considering Tesla is kind of branding itself as an energy company. As everybody knows, the $1.7 trillion stimulus bill, aka the ominous energy bill, is attempting to get signed. I saw a nice picture with Rand Paul standing out front with basically all of the list of grievances around it. Stu will cover what is all in that bill, specifically from CCUS all the way to hydrogen. Finally, a crisis is looming for the U.S. energy grid, as I'm sure you guys are aware. Yesterday and today has been extremely cold. We've had multiple grid failures. So Stu will cover all what the grid looks like. Very interesting over on the financial side, Stu. Not a great day for the overall markets. Oil almost touches $80, falls back down to around 77, currently trading at 78.47 here on the 22nd at about 554. Natural gas, you would think, would have a solid day ahead of itself, but it did not. Stu, we're currently trading about $5.09. And that mainly is due to a slightly bearish EIA natural gas in storage number, really below that 5-year average. We'll cover all that and a bag of chips, guys. But first, check us out on the world's greatest website, www.energynewsbeat.com, the best place for all of your energy news. Stu does a great job of curating that website and making sure all of the best financial, energy stories, political stories, and anything that has to do with energy, it's there. We appreciate his hard work, and we appreciate you guys checking us out. www.energynewsbeat.com if you want coal in your stocking. Enough of the pleasantries, though, Stu. Where do you want to begin tonight?
Hey, let's start at $100 to return to 2023. And hey, I just want to give a shout out to our fans that are asking questions. And if you go to energynewsbeat.com, go to the top bar, and it is ask a question is on that top bar. Fill out that form, and Michael and I will actually do the research and answer your questions. So that being said,
maybe if it's a good question, if your question sucks, I'm just going to bring it up on the podcast and roast you. So ask at your own peril. Just kidding. But not really.
I can't wait to fill it out just as a joke. Okay, here we go. Eric Nuttall, I really like him, and I think that he is. I got some key points in here. The Bank of America predicted that Brent would quickly go past $90 on the back of the dovish pivot, and so they've got some room there to be wrong. BOA, as a forecasted Brent currently trading at 77, will average at 100 in 2023. And I agree with this one. And Chinese oil demand recovery and a post-COVID reopening, coupled with a drop in Russian supplies, about 1 million barrels per day. Side note, that was because of the second group of sanctions, as well as some other problems with tankers, but that's another story. According to the investment bank, and OPEC Plus is likely to full implement a 2 million barrel per day output cut in a bid to boost prices. I think, Michael, that a little bit of that is not only based on looking at thinking that they're going to shore up prices. I think some of that is the inability for them to actually increase production. They had the reduction before, and Actually, million of barrels of their last reduction was because they couldn't produce enough. So I think there's a bit of a combination of lack of ability to produce, and they're going to cut it down again. So, all right, going around the corner
Well,
here.
hey, I have to. I'd be remiss if I didn't comment on this story.
I tried to sneak the hike of that football to get right
You
past
did.
this play. I tried to hike the
4th
ball.
and 1, I stopped you. You tried to sneak, I stopped you. We brought in the bear defense. I think it's important to quickly read. Here's what they're saying. So Eric Nuttall, he's a partner and senior portfolio manager over at 9 Point Partners. I actually follow him on Twitter. I think he's a great guy. I do disagree with his analysis here that oil will probably average $100, but he told the Financial Post that oil prices will return to $100 in 2023. According to the analysts, many of the headwinds that have cut short the oil price rally this year, including China's zero COVID policy and the coordinated SPR releases by several governments, will no longer be there in 2023. Coupled with those sanctions on Russian oil and gas, this should elevate prices. First thing I disagree with, I'm not necessarily sure the sanctions on Russian oil and gas are going to increase prices. I think it's going to decrease the availability of oil. But does that necessarily mean prices are going to drastically rise, or are people going to be shifting energy sources? I think it's a little bit of what we've talked about. People are moving to coal versus buying oil. And if you're not buying oil, it doesn't necessarily how much we produce. I think when you look at the EIA forecast for what crude oil inventories will be in 2023, I will go out on a limb and say they're going to be higher than in 2023, mainly due to the fact that all of these wells that got drilled in 2022 are going to come online.
Right.
And in my guess, demand won't necessarily outstrip supply as it did, as everyone is expecting, even if China does come back. Because I'm tired of betting on China. We don't know what China is going to do. They could come out tomorrow and tell me that they're shutting down again. So I think if your sole reason is that Chinese oil demand recovery will happen post-COVID, I'm in a wait and see mode with them, because you don't know. Personally,
I agree with that statement, but I disagree with the other statement, because the Russian price cap did pull 1 million barrels per day off, but it went to the dark side.
I agree with you. But prices didn't go up. I'm with you that it takes oil off the market, but we're not in a normal energy market where you have to balance supply demand. All of this analysis is based upon supply and demand. We've been screaming for a year and a half now, Stu, even since we were at the old regime, that supply and demand isn't necessarily what's causing prices to fluctuate as quickly as they are, and especially in these last couple months. So I think if your only analysis piece is, well, Chinese oil demand is going to come back to where it was, cool, man. Like, that's what they're saying in Econ 101. Let's go to Econ 201 and figure out what's the story behind the story.
I agree, but you have worldwide global air travel picking up. It is projecting to pick up. That will increase some demand as well, too. So,
and I'm not saying increase in Chinese oil demand.
No,
obviously, if Chinese oil demand increases, prices will rise. Absolutely. Right. I'm not arguing that. What I'm arguing more is that if that's your only point, well, Chinese oil demand is going to come back. Give me something else. I need a little bit more meat on the bone. Do I necessarily see oil prices going down to 50? No, I really think it's 85. I think $85 for WTI, in between that 80 to 90 range, is where we'll see it in 2023. If anything, I think we see prices a little softer. Do we see maybe 100 once or twice? Unfortunately, I think we see $100 if something crazy goes off in this war in Ukraine. I mean, really, or some unforeseen, event, Saudi Arabia shuts in all of their oil for some reason, or huge increases in the amount of OPEC production. I just have a hard time giving a prediction when the only piece of information that I really could use is Chinese oil demand, because I don't know what's going to happen. They could come out in February and say, we're back to COVID zero, lock them in. I mean, They just built all of these COVID shelters. What are they going to do? Just tear them down? I mean, you've seen the pictures.
Right.
So that's all I'm saying. I don't disagree, but I don't agree with this. I don't agree with $100 oil in 2023. Does that make me a perma bear? Probably. I'd love to be a little bit pessimistic, but I have a hard time seeing that. What I do agree with this, though, he does say that he also predicts that the energy sector will continue to outperform other market sectors due to high demand in oil and gas stocks. That I agree with. I think oil and gas stocks are poised for a very, very good 2023 following up 2022 right. because their valuations comparative to the amount of revenue they make is drastic. We're about to cover Tesla and Exxon. You want to talk about the difference in revenue between Exxon and Tesla? It's no comparison. But then talk about their valuations. They're exactly the same as of today. Not to spoil our next story or one of them, but I think that I agree with him there. Do I necessarily think oil price are going to be $100? No, sorry.
Cool. Let's go to that story. Okay. Running around the corner, we've got the one here with Tesla. Why don't you kick this one off?
So, I mean, really what I think really, I think the headline of the story goes, Tesla is now worth less than Exxon as the stock plunges towards worst month, quarter, and year in history. Oof, not a good year for Tesla. Headline mainly reads, Tesla shares declined more than 8% on Tuesday, pushing the electric car vehicle maker's valuation lower than oil giant ExxonMobil Corporation after the stock's previously descent below a critical battle line of 150 a share. Shares of Tesla, ticker symbol TSLA, fell 9.6% to 140.180 on Tuesday after closing lower than 150 for the first time in more than 2 years, a level that analysts said was a key test of investors' faith in the stock. Tuesday's decline was the worst of the S&P 500 index, which was down at 2.9 percentage points, and Tesla shares were also the most active on the index as they wrapped up a 3-day losing streak that has wiped 12.6% off the stock. Stock is down more than 48% in the quarter, which would easily be the worst calendar year in history, eclipsing the 37.5% decline in the second quarter of this year, and it was also down more than 29% just in the month of December, which would be its worst record on month, beating a 24% decline in December of 2010. Whoop, whoop, whoop. It's also declined 60.9% this year in 2022, which is pretty unbelievable. So what does this mean? This is in my opinion, this is a clear sign of valuation gone wrong. Now, we all know that valuations are based on multiples, and tech companies, every industry has their own multiples. In oil and gas, multiples are more tied to revenue than they are, market capitalization or all of that other stuff. In tech, it's a little bit, what do we say? Fairy dust. Like there is a little bit of, oh, we'll look at revenue. We'll get to an EBITDA. We'll then come down to net income. And from there, figure out outstanding shares, then get to a market capitalization. But it's a little bit dicier. And I'm not a tech analyst. I don't want to, anybody who's listening who is a tech analyst first, I'm sorry. It's been a rough year for you. It's been a rough year for you. It's not, I mean, you're compensated very well. Trust me. This has been the first time in years you've dealt with this type of stuff. But this, as I mentioned in the last segment, comes down to two things. Tesla is now starting to get valued like most companies that create physical products do, based on revenue. What is it? 8 months ago, Tesla was worth more than every other car manufacturer combined. I'm pretty sure, even with the cool car that Elon's got, even with the fancy touchscreen, even with the 0 to 60 in like 2.8 seconds, you still have to realize it's a car company. And it was, clearly, trading at a multiple that was way too high. Okay. And, Stu, what I think this shows is that the markets are shifting a little bit. We covered yesterday that Warren Buffett, all in on oil and gas. He's basically the largest single shareholder in Oxy, probably one of the most influential people on that board, considering he's probably, if there's one person at that company that's got, what's her name? Who's the CEO over at Oxy? How am I spacing her name? What's her name? If anyone's got her cell phone number, he's got it. Okay. But I just think that Tesla, in the long run, Tesla is probably going to be an extremely successful company and will probably still be the most valuable car manufacturer. Should it be worth more than ExxonMobil? Ha! No. So I think this is a more reversion towards the mean than anything
Vicky
else.
Hollow.
Oh, Vicky Hollow. Of course. I'm so sorry. We love Oxy. We love
Oxy. Now, hey, let me step in on your toes here for a second.
Okay.
There is a reaction going on to Tesla because of Elon buying Twitter. People are offending. There's two different aspects to Elon buying Twitter. That is, you're going to have the folks that have been buying a lot of his cars, have been buying his cars. They're upset with him doing that. If you've been following the Twitter stories or events, Elon put out a survey and said, do I need to step down? Yes, people did vote and say that. As soon as that triggered and he said he'll step down and abide by it, Tesla stock went up. Elon is one of the smartest guys on the planet, and he is going, do you think he's going to relinquish control to somebody? He's just going to step back and let somebody be a front man for it, and then he's going to go do what he needs to do on Tesla. The other thing is, Michael, you and I both know that there are guys that are on the either center to right that are now going, hey, I appreciate free speech. I'm going to go buy a Tesla. I'm seeing that a bunch. And so you're going to see some of his market change. And I think that fortunately that the crowd that is going to change too has money. So we still don't know how this is going to play out. And I really liked all your stuff. So,
well, it's also, you have to look at this. As I mentioned, revenue. I mean, here's where Tesla being a $600 stock was insane. Okay. In 2021, Tesla had an annual revenue of $53.82 billion. That's right. Big. That's big. That's big. Okay. That's for the whole year. Okay. In Q4 of 2021, one quarter, ExxonMobil made $81.93 billion in just straight revenue. Okay. I'm not talking about, obviously there's net income, there's all that jazz, blah, blah, blah. I'm just talking about revenue. Stu, 4 times the amount of revenue for Exxon versus Tesla. In what world is Tesla more valuable than Exxon? It's only more valuable in the U.S. stock market because it's exactly of what you said. The way investors look at, Tesla and the future versus Exxon and the old guard. So going back to our first story, why I believe oil and gas stocks are a great place to put your money if you're invested in the markets. Again, we don't give financial advice, never would, never have. But if I were going to, oil and gas is not a bad place to put it because there's a lot of run room left. There's a lot of runway left to the upside, which is exactly, in my opinion, what Warren Buffett is seeing. I mean, it's crazy. 2021, $280 billion for Exxon.
Warren Buffett is seeing more than that, and that's why Warren Buffett is going into Oxy. Mm-hmm. Exxon, Oxy, we talked about this on our show the other day. Oxy, she absolutely sees the fact that they're going after CCUS and they're going after that market. It's going to be a multi-trillion-dollar market.
Yeah, so it will be. And I think as you're about to cover on this $1.7 trillion spending bill, there's a lot in there. So why don't you cover that one?
Why don't we go to the grid here first? Okay. And the next one is there's a grid problem, and visiting with folks about it. Here we are. I'm just going to say, I got my lights off because they keep flickering because I'm in Dallas and ERCOT's having some issues.
I got it. I knew there was a grid. I knew there was cold weather coming, and I got the heck out of Dodge because you can't trust ERCOT with anything. I had to literally call. I had to put my apartment number on a list through my property management company so that the maintenance people can come check it and make sure my pipes don't burst. So the cold weather, I mean, again, we said this yesterday. If you're a lineman, if you're working in the energy field and you can't go home, I mean, God bless. We saw some. I mean, the picture you posted, Stu, on LinkedIn from Sandstone's LinkedIn with the frozen head. I mean, I've seen that a lot today. So I got out of Dodge when I heard weather was going south because I knew Dallas and Texas was about to shut down.
I gotta give a hand to our employees. I didn't do that. So gotta love our guys and gals. So when we sit back and take a look, Michael, the grid's got problems. The grid's old. The grid has not been updated. The grid is vulnerable to hacking and terrorism and everything else. That we need money to be put in. Let's just hold that for a second here. And so that's pretty much what this article says. Poof, there are problems. Everybody knows there are problems. So let's go to the omnibus bill here. Oh my goodness. This thing is, you and I have talked about Dan Bongino in the past. The way he says porculus, I absolutely love his term porculus. And then who were you seeing? Was it Rand Paul that you said was standing in front of that?
Yeah, he had this like booth setup of like, I forget the picture. I'll have to find it and send it to you. But he had the bill, which was,
Right.
2,000 pages. Nobody's read it. Trust me. Nobody's read the whole thing cover to cover.
Right.
You probably physically can't. You physically probably can't read the bill energy, but he was just pointing out all of the crazy stuff that's in it. I mean, I think there's some interesting stuff in the energy, which I hope you cover here, but
oh yeah, let's go through it. And so when you take a look at, they really do try to go in and talk about the DOE Grid Deployment Office will receive approximately 59 million for fiscal year 2023 for spending measure. Here's my issue. They have let this group, the Grid Deployment Office, in control of this, and who's controlling it?
I don't know.
People that don't understand the grid. What are they going to spend this on? If they don't have experts nailed down to do the grid, and you put more the whole problem with the grid right now is you cannot mix renewables with fossil fuels without a properly designed grid. I don't know how to design it, but I know who to ask. So 16 million of it would go to develop power grid infrastructure, with 2 million would help integration power lines across multiple states.
I'm glad. 1.7 trillion dollars of spending, and we put $16 million towards the grid.
Thank you.
My.
You just picked up on it, dude. And that is, okay, 1.7 trillion. The grid is in the worst shape. Because we've abused it. ERCOT is doing the best they can. I'm not going to dog on ERCOT. They're trying.
You want your lights to turn. You want your heat to work tonight.
Yeah, I love my linemen. I love ERCOT. I want my stuff. I don't. Anyway, you hit the head on the nail. and the reason I say that is there's no money in this grid funding, and they identify it as one of the major things it's going to fix. There's not enough money in there to put in management, to harden the grid. There's nothing in here that will fix this from terrorist attacks. It is missing just about everything that you could possibly have. Now, going on in the summary, look at this. I repeatedly said, this is Gastinger in an email, that building out the transmission system is to address the energy transition and meet the goals and more resilient in the next 2 to 3 decades. It's helpful, but it's going to require more than that. It's a moonshot. And what he's referring to here is we went ballistic back when we went to the moon. The whole country rallied together and they did everything. Guess what? We need that same kind of thing again. Now, It's going to take innovation. Michael, you and I've been a big hydrogen fan for years, but the technology's not there now. They're putting more into hydrogen than they are the grid. You cannot support renewables without a grid. And you're going to need you're going to need storage, energy storage, if your grid is terrible. But you can't use energy storage until your grid is repaired.
Yeah, I mean, it's
I was scratching
50 billion. What is it? What's the total number that's going towards the DOE? What is it? 46.5 billion dollars goes to the DOE,
yeah.
And you've got 16 million going towards grid infrastructure. I mean, if that tells you if that doesn't tell you or show you the competence level of the people who are writing this, nothing will. I mean, it's that there's a reason your lights are flickering, Stu. These type of decisions right here.
I agree. That's why I brought all these up. You got grid problems, you got all these things going on, and it is just infuriating to me. We need renewables. We need nuclear. We need solar. We need wind. We need natural gas. We need all energy, but it won't work without a properly designed grid.
But trust me, Stu, that sweet, sweet American natural gas is keeping us all warm right now.
You bet. And I sit here without my backup propane.
Scary.
Yeah, I need to get back to bear country as soon as possible. So
no kidding.
What
do you got next?
Okay, that's it for me tonight, dude.
Cool. Well, we'll keep it quick here, guys. Not much happened on the oil and gas price front. We did see a nice little spike in oil prices. They did get up to about $80 yesterday before falling and settling around $77.90. Currently trading at $78.29 here at about $6.20 the night before. I mean, again, we had a $9.5 million storage draw last week, or that the EIA confirmed on Wednesday. Today at about noon, we'll see the latest EIA drilling productivity report. But really, I think we're caught in between this. We're caught between Chinese oil demand. Where does that roll out? And really, where does it roll out in real time? We can all make predictions about, it's going to come back, it's going to do this, it's going to do that. Everyone's going to be flying. But as the data comes out and confirms all of this, that's when I think you'll actually see that bull side take over. On the bear side, I mean, we did not have great economic data that came out today. It did show that jobless claims still stay low. So as much as that's a great sign for everybody, I think is what Stu mentioned, jobless claims coming out so low probably means people just start giving up on work. So I think we'll check in on that. Overall markets did okay. SPY was down 1.4 percentage points. NASDAQ tumbles down to 2.5 percentage points. That's a lot to do with how Tesla performed today. Tomorrow, as you wake up and listen to this, you will be hearing and we'll know what inflation looks like. The consumer price index is the main factor that the Fed Reserve looks at when they go to set interest rates. So it's mainly, it's not looking good. To give you an idea, the core personal consumption expenditure price index, which excludes food and energy. Gotta love that. You exclude food and energy, the two things people need to survive. But core personal consumption doesn't include food and energy. That actually seems insane to me, but whatever. Expect to have gained 0.2 percentage points in November, the same increase we saw in October. According to economists polled by Dow Jones on an annual basis, that measure is expected to have climbed 4.6 percentage points. The BEA will also release personal income data. Economists are calling for a 0.3% increase in November, which would be a step down from October's gain of 0.3. And again, this is coming out at a critical time, reflecting the impact that the Fed's 6 previous interest rate hikes in 2022 as the central bank's attempts to cool the economy. Got to love that. Well, the weather's doing the same anyway. And policymakers are issued their 7th rate increase on the 14th at a basis points hike of 50 points, as we're all aware. So, It'll be interesting to see what this personal consumption report comes out. Because again, you're leaving out the fact that food and energy are like the two highest things that people spend money on. So I love the fact that that's what the Fed uses to make sure they're doing well. Let's look at how I can't even come up with an analogy that would make sense. It's just pure stupidity in my opinion. But that's what we've got running our country, guys. So yay. Over on the oil side, we did see natural gas storage come out. We saw an 87 billion cubic feet draw from storage. Remember, the range of expectations were between 80 and 110, so a little bit on the lower side. Majority of that increase came from the east, which saw a 33 BCF change over. Unfortunately, that didn't do much to buoy prices, Stu. We got up to about $5.60, tumbled all the way down to about $4.9, settling at $4.95, currently trading at about $5.15 here on at about 9:24 here on the 22nd. You know, you would think with this cold weather, Stu, we'd see a big spike in prices. Not on the spot market. We did see on the individual stock market prices go extreme. Prices did spike a little bit. Mid-Continent gas trading for about $24 an MMBTU. We did see CIG pricing trading at $44 per MMBTU briefly, but again, a lot of that stuff has come down. Cash markets, again, still spicy. We are still pretty warm on the long-term weather markets. But it's again, in this short term, it's extremely, and I love this. Wood Mackenzie analyst Colette Bergen says Santa's delivering an early harsh freeze to the United States this week. So you can blame Santa for this one. But as we know, futures traders are more focused on that bearish storage report print, which we had about 110 BCF last year. We only did about 87 this year, and that warm streak coming up. So unfortunately, signs are still not good as we move into the future for natural gas. But mainly, I think things are settling out and people are getting ready for the holidays, Stu. So you got anything else for today?
Nope. It was a great day. Great show. Good job.
Well, with that, guys, we're going to get out of here. Let you get. It's Friday, people. So again, we really hope this is your last day of the week. We hope you can have a wonderful Christmas with your family on Sunday. We do hope you get Monday off. But if you are one of the many people in oil and gas and energy that have to work, one, we appreciate it. Energy Newsbeat specifically thanks you, and we appreciate you guys keeping us warm. But we hope everyone again has a great Christmas. And with that, we'll let you get out of here, get back to work, finish up your day, and on to the weekend. Hopefully you don't have, I mean, if anyone, okay, for a quick little rant, nobody better be planning meetings tomorrow. If anybody set a meeting for Friday before Christmas, I don't know what to say. I mean, I'm sure some people are. Grind session is in tight, but we hope you're meeting free tomorrow. For Stuart Turley, I'm Michael Tanner. We will see you on Tuesday as we take Monday off. Bye now.